Mate, we're live.
We're here. Hi.
Now, I think we're live on LinkedIn and YouTube, but we may not be live on Facebook.
Oh, well.
So we're just going to go with the flow, right?
Yeah, we can post this later to Facebook.
Yeah, because we're professionals.
Always. Always.
Okay, so now I was thinking before we jump into the Get Buy Ready show for today and talk about the 5 most common mistakes buyers make.
Yep.
Put you on the spot. Talk to me a little bit about our posts that we just sort of popped into our various groups and LinkedIn talking about the investor special. Like,
sure.
What are they? How did they come up? Why are they on offer?
Yep. Okay, cool. So I'm happy to take the floor on that one. So we've had 2 that have come up in the last couple of weeks. And this is something that's going to continue as we... basically, it's a byproduct of what we do. So we're constantly looking nationwide for deals, things that stand out to Sam and myself that are great value, typically properties that we can add value to increase the rent, to better the yields, properties that have got potential for development upside down the track. Might not be today, but something like in 10, 15 years' time, so there's an uplift at that point as well. And that represent good value today, that are strong yields. So they're fully leased, there's no risks. And they're most importantly in really high growth areas. So we're looking constantly, because we're all property investors here, including you, and including Lisa and our team as well. So we're all big fans of investing and building wealth through property ourselves. So we're constantly looking nationwide. In fact, we're building some software in the background. I should tell you about this, mate, actually. Yeah. I'm high tech, you're analog, but it's the other way around. But we're looking at building tech at the moment where we can streamline this process so that I can identify these properties even faster and be able to create these opportunities for our clients. So where we're going with it is we've got clients that are paying customers of ours that are giving us certain briefs. They're getting out and seeing properties, or they're looking in particular areas. What happens with that is we're constantly cross-checking the value of the properties that they put in front of us. So, if you came to me, Drew, and said, "Yep, great, I've seen this property that I really like," Sam and I will very often put another property up against it that we've found, either pre or off market, and say, "Okay, great, that's good. The one that we found is as good, or is it better? Let's weigh up, whether or not that is value in the local area, and then make a decision which one to buy." And twice in the last couple of weeks, our client has gone in a different direction and still bought an absolute cracker property. And what we've been left with as a byproduct of that is 2 really great investment grade properties that are worth sharing with our database. So that was what the post was about. So one of them, just very quickly, was 3 apartments on 1 block of land. It was a corner plot in a high growth area north of Brisbane, commutable to Brisbane on train, under $900,000 and positively geared with all those things that we just discussed already. Scope to increase rents, scope to develop down the track. And the second one was in a regional New South Wales major city, and that one is the same, high growth. It's actually got 6 units on it, so 6 separate income streams. We've managed to negotiate that property $110,000 below the asking price already, so you can buy that today for $690,000 on a 10.11% gross yield in a high growth area. Yeah, amazing. So 2 really good opportunities. Didn't fit for our clients because they were doing certain things with their portfolio, but nonetheless great buys. So jump in and let us know. We've already had a few of our people in the group already put their hands up to explore it, so we're doing a bit of DD with a few different buyers, but first in, best dressed. So if you're interested in these, or you want any future ones that come up, which will probably end up being every week or fortnight for us, please indicate to us and we'll make sure we can custom that search to make sure you find the right thing fast. Yeah,
well, that's it. Part of being in the Get Buy Ready course, Get Buy Ready group, is that you're closely tied to us. So if you're serious about investing and building your wealth through property, and you either even if you haven't engaged our analysis and negotiation service, you should make your property objectives known to us, because we're in the market day in, day out, and the reality is you're probably not, and we are day in, day out.
You're busy.
Yeah, you're busy.
You're busy.
Okay, that's awesome. Great opportunity. And needless to say, they're not going to hang around. So it's like fast action takers.
Yeah, totally. Yep. And the other thing before we jump into talking about the common mistakes buyers make in a cooling market, which is what we titled today's chat, I really wanted to have a quick chat to you with some case studies that we talked about for underquoting that's happened to us in the last week or 10 days, and also bait advertising. So just really quickly to give you a breakdown of the two different things that you might come up against in a softening market. Underquoting unfortunately happens in any market. Bait advertising happens more probably in a softening or falling market. But I can give you a very quick rundown of what they were and then apply those to two case studies of this happening to clients of ours at Hulla House in the last week.
No worries, sounds good.
Happy to do that.
Mate, if it looks like I'm standing over here holding my breath while you're talking, it's because I just had a big beetroot juice with a whole garlic clove.
Gross. Yeah, I'll step further out.
It just must be pouring out of my pores.
Okay.
All right, so I'm going to look this direction.
I'll take one for the team.
Thanks, mate.
All
Jump
good.
in.
Jump in. Cool. Well, let's talk about everyone's favourite topic in the media, which is underquoting. Most people know what this is. It's rife in the industry, and we've been huge campaigners against, ironing that out of the industry over the last 4 years at Hulla House. So it's something I'm very passionate about for and on behalf of purchasers. But an example of this versus bait advertising is probably going to give you a bit more insight into this at a pro level, so you can understand and identify when it's happening and work out a way to navigate around it. So underquoting is when an agent will pitch the listing to the public at a low price when they've over pitched it to the seller at a much higher level, and they're legally allowed to quote a 10% range. But the example that I'll give you that we came up against, that we competed at an auction on the weekend for our client, was a property that was marketed at 1.3 mil plus online, which means legally their seller should have been nowhere beyond 1.43 million, which is 10% higher. Anyway, fast forward into the story. We offered 1.46 million during the campaign because we knew it was worth substantially more than that, having done our deep dive analysis into it. They rejected 1.46. The agent even bragged to me that they had 21 contracts out, and that was the reason why they weren't interested in selling for more than 10% above the bottom of the range. They never moved the guide price, which is illegal, and then they proceeded to auction on Saturday. At auction, we hung up the phone when the bidding was racing past 1.55 million. So another 90,000 on top of that again. So we're talking now 20% basically above the guide price, and the agent has hidden the price in online, has just changed it to sold, not promoting what it sold for, and refused to respond to the newspapers on the Saturday, realestate.com and the rest of it, when they did their auction call arounds. So the property was just ghosted. So that's their way of hiding behind that result, is that they underquote to buyers, overquote to win the listing, and then just hide as if nothing happened and they didn't do anything wrong. And this is unfortunately very common. So that's underquoting. The different side of that is bait advertising. We bought a property on Friday that was advertised at 1.4 million.
Yeah.
Again, we did our research and felt that 1.575 was fair market buying as our estimate.
Yep.
So we made an offer on the basis of buying it below that market estimate. What happened though, it was listed a week prior to that on a Thursday. We immediately offered 1.4, which was rejected, 1.45, which was rejected. They then had an offer of 1.5 million, so $100,000 above the asking price, sight unseen, before the property was even open for inspection on the Saturday morning. So this is why we say to you, you've got to get to these properties first, because we thought we'd pay the asking price because it was a great deal and it'd be done and dusted. We got there as quick as we possibly could, but someone else had the same idea and they went $100,000 over the asking price because they also knew what it was worth. And this is what you're going to compete against. There's other buyers in the market. When you're buying A-grade assets, lots of people know about them and are waiting for those opportunities. And even at 1.5, it was still great buying. So they had 30 people through the first open for inspection. They then tried to get us into a bidding war. Our client wouldn't go beyond 1.5 to beat them, so they agreed to sell the property for 1.5. Long story short, the owner messed around with all the terms and conditions of the sale, and on the Thursday, the buyer walked. So the agent called me back and said, will you pay more than 1.5? I said, there's no way. He said, will you pay 1.5? I said, no way. And he said, will you pay 1.46, which was what your offer was after the 1.45 was rejected? And I said, no way. And I started offering at 1.4 and ended up in a contract race again with another two new buyers and ended up having to pay 1.45. So we ended up saving $10,000, which ended up being $125,000 below market value. Still a really great buy, and we bought a fantastic A-grade asset. But it just shows you that if they bait it at the right price, they're going to encourage a lot of interest in the home. and that has the ability for the price to run, a long distance from there. So a lot of our buyers will come to us and say, hey, why is your market estimate higher than what the agent's guide price? And it's because the agent's guide price is there to create value at mass. They want most buyers they possibly can interested, and the likelihood is the price will go beyond that. Yeah. So that's the difference between bait advertising, which is legal, and it's a sale tactic, and underquoting, which is illegal.
Yeah, great. Well, mate, they're two great examples. And, really what it highlights to me is, like, if you're an average buyer and you're uneducated around the buying process, which, as we know, is find, analyse, negotiate, and then obviously transact as a byproduct of that, how on earth, if you were unskilled at analysing, could you ever develop a negotiation strategy?
Well, you've got to know that these things are at play while it's happening, and you've got to understand the speed at which you need to move in these circumstances to secure these properties. And you should be competing for A-grade assets. You shouldn't be buying pig assets that there's no one on. We'll talk about this in a second about low-ball offers and trying to find bargains. That's not the game when you're buying property. If you get a bargain buying an A-grade asset, great, good luck to you. But you shouldn't start out by looking to try and find a bargain, because that's a mistake a lot of rookie buyers make. And those are the properties that just simply aren't going to see the same capital growth, which is why they're not in demand.
Yep, perfect. Well, that's a great segue into...
You stink like garlic.
I know, sorry.
I'm joking. I couldn't help my segue.
I know, when I was drinking the drink, he was like, oh my God, mate. You've just wiped out the whole office.
All good.
So let's dive on in. So the subject for today was the 5 most common mistakes buyers make in a cooling market. So we're going to dive into number 1, and that is wait to see what listings appear on the main property portals. Rookie error. Yeah,
and we talk about it heaps, so we won't harp on it too much today, but it's a crucial one, which is why it's the top of the tree for me, is that if you're waiting to see properties come on real estate and domain, you're waiting to compete against end users. So, we've all heard the early bird gets the worm. Up to 40% of properties sell pre or off market. You need to put yourself in that position where you're seeing more of the market to understand value better and what your choices are, to then be able to get the right asset and select the right properties to suit your purposes. And of course, the earlier you get there, the less competition you've got, so you knock out those emotional end users that are going to pay that premium price and push it beyond, beyond price value, really. The other key thing for me as well is, in this market, in a falling market, the motivated sellers, they're nervous, right? They're getting nothing but bad headlines in the media. They may have bought already. They may have a need to sell. They may be under financial pressure with interest rates biting, whatever it might be. Those nervous sellers are going to look at the first buyers that come through and make a realistic offer. And they're going to make a decision on selling at that early point. You've got to be there at that early stage. There's no point trying to buy at week 3 or week 4. Because you're going to be competing against other people, and you're probably dealing with a vendor that's not ready to meet market. Yeah,
well, this comes up when I'm talking to clients, in our discovery call, before they've made that sort of decision to work with us as a client of the analysis and negotiation service. This question comes up all the time. Oh, well, what happens if I, find a target property tomorrow and the open for inspection is on Saturday? Like, how do I deal with that? And, as I say, we're going to do, move heaven and earth based on our skill set to engage with the agent
to get access
and get early access and try and negotiate that property before anyone even sees it.
Yep, that's crucial.
So that's so when we're talking speed, that's what we're talking about. You've got to do whatever you can to get early access. And the reality is, as a buyer, as a retail buyer, someone who's calling the client up, the agent up out of the blue, you're not going to get that, and we've spoken about this before, that sort of same level of professional courtesy that might be the difference between getting that early access and not.
Yeah, and if you're talking about why it's important, once you get to that open for inspection, then the agent can use leverage against you. They can use other buyer interests to really push your emotional buttons to get you to pay a premium. So if you get to them early, when there's no other buyers that have seen the home, it takes that potential leverage out of it, and that sales tool out of the kit for the agent that's going to use it against you. So really important to do that. Now, if it's not always possible to get in and see the property before the first open inspection, it might be tenanted. The agent might just be real hardball saying, no, we can't do it, I'm away on holidays, Saturday's the first time, whatever the reason is. But if you can't physically get there, do all of your due diligence first. Ask them if they've got a building and pest inspection. Ask if you can do a building and pest inspection before the Saturday if you think it's a house that's going to tick all your boxes. Get the contract, have it reviewed. Do all your deep market analysis so you know what the value is going to be, and you just need to top that up after you physically inspect it to really understand what you should pay. That will allow you to walk through the open home and then minutes later make a really strong, compelling offer to buy it. Yep.
Yeah, and so what Scott's just talked about is all the things that we do in that gap between a client appointing us and prior to that open for inspection. We're doing our deep analysis. We're getting a real understanding of where that property lies in relation to the rest of the market. We're also talking to the selling agent and establishing the buyer's motivation for selling. And in that early stage, we're already developing the negotiation strategy, and that's sort of the difference between having expert representation and trying to sort of figure all of this out, because if you identify the property and you're just going to turn up on the Saturday, you're in a race.
Yeah, and if we're really honest in this situation in terms of who actually applies the tricks and tips to do this effectively, you find that most buyers think they're doing it, or a half-assed job of it, but they're doing a poor job of it. So I hope our client, if she's listening, doesn't mind me using this as an example. But we had this conversation a couple of weeks ago with a client of ours that was looking, and I said to her, are you doing our BCC trick? Are you sending emails and staying in contact with the leading local agents in your area that sell the type of asset at the price point that you want to buy? And she said, yes, we are. I said, okay, great. How often do you speak to them? She said, weekly. I said, okay, that's great. How many do you speak to? Probably 5. I said, okay, good. Okay. How many agents are active in your core suburbs that you're looking? And she said, I don't know, probably 100. I said, okay, cool. How much market share do you think those 5 top agents have in the core market that you're looking to buy? And they had to really have a think about this because it was a bit of a left field question. Probably no more than 20%. Okay, so what you're saying to me is that you're talking to 20% of the market and you're not talking to 80% of the market. So 80% of the opportunities are missed. So you think you're doing it, but you're not doing it good enough. And it's free, it's quick to do. You've only got to set it up once to create that list of who the agents are, and then you will get those opportunities.
And best of all, our clients, the clients that are actually working with us in the negotiation service, they're working with our buyer coach, and we're holding their hand through this process and setting up all the automation to do it.
Totally.
Very easy and seamless.
Yep.
And what that's going to bring forth is, potentially there's 40% of the market that
you don't see.
Yeah.
Jinx.
Shazam.
Yeah.
All right, let's do it.
They're all numbered number 1 as well, by the way, just to confuse you.
So I'm moving on to number 1.
Yeah, move on to number 1. They're all just as important.
Okay. So number 2, casually watch the market because there is no rush in a softening market.
Of course there's a rush in a softening market. There's a rush in every market.
Really?
Yes. This is the reason why buyers take, on average in Australia, 7 months to transact. Did you hear that right? 7 months, which means there's a whole heap of people that are taking like a year and a half. I actually just crafted an amazing article today. Okay, you're telling the story.
Yeah, I know. Yep. So I was crafting an article and I was talking about that. I'm saying, when you think averages, everyone sort of goes, oh well, am I average? Am I performing a little bit better than average? Like, where's my performance in relation to the mean sample? And the reality is, some buyers might be actually out there transacting once they've got a conditional approval in, I don't know, days or weeks. Average is 7 months, which means at the back end of that, it's taking people 14 months, over a year to transact.
Yeah, which is common by the mortgage brokers that we talk to in their client database. But the reasons for, the no rush in a softening market making no sense to me is because you have to consistently re-educate yourself on what the market's doing. you have to consistently re-engage with the same agents that are going to give you those pre and off-market opportunities. And the problem is, if you don't act when the agents want you to jump, okay, if you don't jump when they ask you to jump, in terms of we've got a great pre or off-market listing here, I've made the special effort, Drew, to give you a call, give you this private opportunity to do it, and you say, mate, I'm busy, I'm playing golf on Saturday. I'll come back in a couple of weeks' time. Are you showing you to get an open for inspection on a Sunday? Sundays are better for me. I like to get on the Terps on Saturday with the mates down the golf club. What's the agent going to do? They're never ever going to call you back. So you're just doing brand damage to yourself the whole way through that process.
Yeah.
And you've got to keep engaging with them, and it just becomes very time consuming. And because you're not seeing the vast majority of the market that goes sold in the first week or pre and off market, you're really out of touch with where the prices sit, and that's what puts you in the seat where you're going to, risk overpaying, and you're also going to be fighting for the breadcrumbs. Like you're not getting the best listings. Yeah. You're fighting with the other punters to buy the leftover stock that no one else wanted at the start.
Yeah, I can remember you telling me your system for colour coding
buyers.
Buyers. So you would not want to get on his shit list. By not actually being consistent and performing in the market, because you would just be colour coded at the bottom of the pile and everyone else would elevate. And so the person that would get all of his attention was the buyers that were, it's like literally that sort of squeaky wheel gets the oil, right?
Yeah. So for those who don't follow that story, I had a Excel spreadsheet for every sales campaign that I ran for when I was an agent. And every buyer's name and inquiry would come through there, and all their comments they made were dated, and I would have a reference point for everything that you said to me about that property that I could refer back later to use against you in a negotiation. But I also colour-coded you as to the level of interest that I thought you had in the home, what offers you made, whether you had a contract, what due diligence you'd done, and I knew which buyers would react to my phone calls straight away and which buyers would go through to voicemail and never ring me back, and those types of things. Yeah. So, there was a hot list of buyers that was almost like a Rolodex of good buyers.
Yep.
And those buyers got the absolute best opportunities, and I can guarantee you they weren't in the market for very long.
Yeah.
They would find great properties and they would strike because they were organised.
Yeah.
Yep.
There's tech for that now,
Sure. Yeah. Pen and paper?
Exactly.
Yeah.
You don't want to look at his desk. Alrighty. So moving on to number one.
Yeah, move on to number one.
Number three. Show no urgency through the buying process as they believe the agent is bluffing with other buyers' interest and hold the cards.
Yeah, so this is a common one that buyers think that in a softening market that they control the cards.
I know.
Okay, can I just blow that out of the water at the moment and say
Please.
You don't ever hold the cards as a buyer.
Never.
The agent is in control. And they are pulling all the strings, and if you are the right buyer at the right price, then you'll get an opportunity to sit at the table, but otherwise you're not in control.
Yeah.
And a lot of buyers think that they can play hardball, they may be good at business or good at something else in life, and they think that applies to the property game as well. It may do, you might get lucky with an agent that you can walk all over and control the process, but the vast majority of agents will be in complete control, and they'll make you feel like you're in control, which is the superpower of a good agent. They'll make you feel like the process is really easy and that you're in the driving seat when you're actually not in the driving seat, and it's being done on their terms because they're very good at sales. So, not having any urgency says to me as the agent, you don't really like this property enough to buy it. You're not going to be my buyer. So therefore, behind the scenes, I'm on the phone revving up as much buying risk as I can from other parties to compete against you because I'm not confident you're going to conclude the deal.
Yeah.
Okay. So if you're going to give off those signals to an agent, then expect that it's going to invite buyer competition against you as well. So there is urgency, and if you're buying the right asset, why wouldn't you rush to secure it? If you're buying a shit asset, take your time.
Yeah.
Yeah, because like if you want to secure a great property that's going to give you great capital growth and the right rental income, or it's going to be your dream home to live in, why would you give anyone a sniff at buying that property if you've spent weeks, months, however long to find that and unearth it yourself? So you've got to move at speed. It doesn't mean rushing. It doesn't mean making silly decisions under pressure that you didn't need to apply to yourself, but it's about being organised and moving through that buying process as quick as possible to not lose those opportunities and make sure that you control what you can control as best as possible.
Yeah, well, I in my little puff piece today, I was talking about that as well, that when you just look at the average buyer, and that may be you. You know that you transact usually every 10 years or so.
11 to 13 years, I think Sammy told me today.
Very, and so what does that mean? Well, in the lifetime of you transacting in property, you might do 2 or 3 transactions. So when you just sort of get logical around that, there is absolutely no way you can develop the skill set at a deep level or the confidence to actually move with speed. And it goes all against human psychology. You know, anyone when they're learning any new skill has to transition through the things that I wrote about before, you know, going from, unconscious incompetence to conscious incompetence through to conscious competence. Now, let's say that you were transacting consistently, doing a property a year, you're probably at a state where you're consciously competent, which means you've got to overthink everything that you're doing, right? And so speed can't be your friend. And it's not until you get to a point where you are unconsciously competent, i.e. everything just happens because it's ingrained in you and you've got that high level of skill set. It's repetition, isn't it? It's like watching you on the phone. Like no one can do what you do with 28 years of experience and 3,000 deals under your belt. Transacting once every 10 years. How can you possibly do it?
Yeah, it's a learned skill, definitely.
Yeah, and on the flip side of that, you're coming up against well-trained experts every step of the way.
Yeah, and that's part of the issue with this point about, showing no urgency, but also letting agents bluff you, and whether you buy into that bluff or you don't. And again, hopefully this client of ours, if he's watching, this is a story from a couple of weeks ago from a good client of ours who is really well educated in the property space and bought and sold properties before. But reached out to us to say, look, I did go it alone and we lost the dream property that we wanted because the agent called me. I'd made my offer. The agent called me and said, there's another buyer and they're prepared to offer X. You're going to need to increase your offer. And he said, basically along the lines of, I don't believe you. We're sticking at our price. And the agent rang back and said, thanks for your interest. We've sold the property. So they lost their dream property because they got out-bluffed by the agent. And a lot of buyers are doing this in a down market because they think they control the cards. Okay? Yeah. And you've got to be really understanding of how the system works, if in the right questions to ask an agent to unearth whether or not they're lying or they're telling the truth. Yeah. That's a big part of the game playing that I do. And it's very difficult to coach that into anyone else, is to understand what questions to dig into with the agent to really get a sense that they're legitimately, confirming other buyer interest and that you'll need to increase your price.
Yeah, absolutely.
And agents are really good at playing that lying game because most buyers who are emotional get sucked in. As soon as you ring up and say, hey Drew, it's Scott here, I'm the agent on that property that you really love. Mate, I know you really love it and you've made your best offer, but looks like we've got another buyer coming in this afternoon that's going to beat your offer. Obviously my job is to sell it for the highest possible price for my client. Hate for you guys to miss out. Might just need another 10 or 20 grand. Do you think you can do it? Otherwise, you probably lost this opportunity. It'd be dialogue along those lines, and at the other end of that phone, Drew's going to be shitting himself because you've just spent 7 months looking for your property, found the one that you want, you've missed 5 already. What are you going to do? Well, you're going to overpay and pay that price, no matter what, because you don't know if he's bluffing or not, and you just want to stop the fight. Yeah. And that's the risk. If you don't know the right questions to ask and how to unearth the truth there, then you're at high risk of overspending. Yeah, well, that's it. It's all about, in the heat of that experience that was just described, how do you reach for the right questions at the right time and deliver them, with the right tonality to take back control of the transaction? Yeah. How do you do it? Yet the reality is you can't. And the industry statistics, suggest that it's a near impossible, and that's why, the 7 months and 45%. I've read something recently. 45% of buyers, so not people that missed 5 times, but 45% of buyers suggest, that they've got buyer remorse after they've sort of compromised on buying what they thought was their dream property, to only sort of sit back and reflect on the purchase and go, you know what, we probably overpaid and we compromised. Yep, very common. So not a good outcome. Nearly half of the Australian buying public. Yep. All right. This is my favourite number one. This next one. This is number 41. Make lowball offers to find a bargain.
Oh my gosh.
Why wouldn't you? Come on.
Yeah,
Lowball everyone.
What a great strategy. Huh? Hey?
This is such a common one that we have to deal with here.
Mate,
I laugh, but it almost just makes me cry that this is still in 2022. People think this is the right strategy, and that they'll go online into these property forums that we're active in and tell everybody that this is the strategy that should be applied when you want to buy property in Australia. It's to lowball everyone and see who cracks first and sells the property to you. You know, go and make 20 lowball offers on 100 properties that you see. Please understand that that is not a strategy. I'll move my arms this way. And there needs to be a smarter way to buy property.
That's a bit like going to a bar and hitting up 20 women.
Come on, mate. You're taking it into a different angle here.
Mate, what's going to happen there?
Bad analogy.
It's not a game of numbers.
But the problem is what I touched on in one of the earlier points. If you're going to base your value buying decisions on who's the cheapest, then you're going to probably buy an asset that hasn't got any interest in it and the seller's very motivated to trade.
Yep.
Yeah, which means you're going to buy a pig asset that's not going to perform very well for you. So, you know, everyone makes their money in property through capital growth. If you're not going to focus on buying something that's going to appreciate in value at the highest possible rate, then that could cost you hundreds of thousands, if not millions of dollars in 20 or 30 years' time when you go to resell it. Expensive mistake.
Sammy did the numbers.
Yep. And the difference between a bargain or what you perceive as a bargain versus paying, you know, a fair price for a really good asset might be 5%. Like it might be 50 grand or 70 grand. But as I said, over the time difference. So I think, Sam, you said 10-year period, the difference between $6% and 7% was over $1 million.
Well,
capital growth.
$177,000 it'll cost you over that cycle. If you're
on $1 million property.
Yeah, on $1 million property.
Sorry, I had it wrong.
Yeah, 177,000. I mean, put that into context. Like 10 years later, what could you do with that money?
Well, it means you could roll again when you've built more equity into the home and buy another investment property and build your wealth faster. But the reality is people don't hold for 10 years. As we said, it's 11 to 13 years is the average hold. In some areas, it's north of 20 years. So you start to, you know, use that same maths over a 20-year or 30-year cycle, and it becomes a huge difference. Yeah. And that's just the difference between 6% growth and 7% growth. Some of these dud assets might be at 2 or 3% growth versus 10 or 15%. So the numbers can be skewed hugely. So that's a big one in terms of making sure you buy the right asset. But finding a bargain. So when you're making an offer, the most important thing for me is to establish where the seller is going to trade at. So if you make a lowball offer and you don't engage the seller and you get a straight no, then you've learnt nothing. You've got no idea where the seller is motivated to move at.
Yep.
Okay, and that's a problem because then what you've got to do next is start bidding against yourself. When you start bidding against yourself, it's easy for the seller, who's inexperienced typically, and the agent who's very experienced to say, do you know what? Let's keep saying no to this buyer, because every time we say no, they say yes. I'll put more on the table. You know, and if they keep bidding against themselves, they just keep saying no, and you keep putting another 5 grand, 10 grand, 20 grand on top of it because you really want the asset. It just shows you're inexperienced, and then I think that's where they've got the ability to turn the screw and for you to really get done over in terms of paying overs.
Yeah, they're going to develop their negotiation strategy around your behaviour.
Yep.
Yeah, and it's not going to go favourably.
No. Not at all. So we had again in one of these major property portals that we're active in, seasoned, I use that in inverted commas, property advisor was in there saying the best way to buy is look at 100 properties and lowball on 20 of them, which is what I just said to you before, which is laughable from our experience, but also just horribly terrible result. Advice, which is eye-watering. But worse than that still, they said they only buy assets that are 20% below market value. I was like, okay, I had to think about that for a while. I'm like, okay, that sounds really impressive that you don't pay more than 80% of a property's value, but let's just dig into that for a second. So if you are making your decisions on only buying properties that are dropping 20%, well then you're looking for those forced sellers, or you're buying assets that are compromised, as far as I'm concerned.
You're shopping for a needle in a haystack.
Correct. So you're going to be spending a lot of time looking for these properties that possibly don't ever exist.
You're probably 14 months.
And then I would say to you, how many of those are A-grade assets that you might have bought for 9% less or 13% less that would have represented absolutely amazing value but you walked away because it wasn't a hard 20%. It doesn't make any sense to have a strategy like that when buying property.
Yeah.
Because all property, no properties are the same. It's very difficult to find identical properties unless you're buying apartments.
I call bullshit on that, mate.
Same, I did. He didn't like that.
Yeah, I just think that's someone stroking his ego to look good in the group, and so there's the real lesson to be learned in that, in addition to what Scott was talking about from a technical perspective, is that you're not going to go and get advice on buying property from a whole bunch of amateurs in a Facebook group.
No.
Like, come on, let's get real.
Yeah, but unfortunately a lot of decision making is made through asking questions there, and you see it, a lot of the expert property people who do know what they're saying don't say a lot in those groups. I know there's tons of other people that are in the industry that have got good businesses in the property space, and they're not particularly active there. They're all in there watching, but they don't throw their advice around too often because there's just it gets lost in translation because there's too many punters that want to shoot you down that have bought one property before in their life, and they know how it should work.
Yeah, exactly. Okay, now moving on to our last number one.
Point number one.
Number 5. Make value decisions based on savings negotiated from the price the agent told you to pay.
Very lazy way of buying property is to look at the guide price or the asking price and make a offer based on what you perceive to be good value because of a price that you were shown by the agent. It's got no relevance to what market value is, and you shouldn't make your value decisions based on how much you save below those numbers. I see this happen all the time, that someone will ring us and say, "Oh, I bought on the weekend. They wanted 500, but I got them down to 485, save 15 grand." I'm like, okay, great, but it was worth 450. Yeah.
Yeah.
So you thought you saved 15,000, but you overspent by 35,000.
Yeah.
Yeah, because the agent's going to position it where they want to, and it goes the other way as well. So agents will position properties high in some instances because they want to give inexperienced buyers a perception that they've negotiated a lot off, so therefore it's a great deal. So if I said to you, Drew, great, this property's on 500, and you negotiate and you beat me up really tough, and I let you control me and make you feel great, Drew, you're fantastic in that dress. And then give you all the compliments under the sun, and then you lowball me.
You're a tough negotiator.
Yeah, you lowball me with 440, and do you know what? Our vendor's going to take it because they really like you and your girlfriend, and they think you'll be really nice in this house, and they love dogs, and you've got a dog, and it just feels right at 440, and everyone's happy, and you sign the contract, and then you look back a year later and you go, geez, it was worth 400 and I paid 440.
Yeah.
Yeah. But I saved 60 grand.
And the agent made me feel really good about it.
Yes, and that's what our job was as an agent, is to make you feel good about it. So we position it high, let you feel like you trampled all over us. You think you made a massive saving, but that was their price positioning tactic. You overpaid, right?
Yeah.
And it goes the other way. We talked about price positioning at a low level to encourage buyers. So it can go that way, or even underquoting. It's the same thing. They price at a low level, and then you negotiate up from there. And they're going to position it where they want to based on where their vendor is and where the market's expectations are. But you've just got to be really careful. If you pay 20,000 over the bottom end of the range, or you save 20 or 50,000 from the top price, it doesn't make any sense to make a value decision based on that result. You really need to understand market value, which is separate to what the agent's telling you. Yeah,
I know, mate. There's nothing that I sort of hate hearing, and that is when I'll call a client, like a potential client back. I haven't heard from them for a week or so. Call them back and say, hey, in the discovery call we talked about this, and this, yada yada yada. Where are you at in the buying process now? Have you got your finance ready? And they'll go, yeah, I actually bought on the weekend. And I go, okay, curious. How did it go? And they'll go, oh, mate, I got a bargain. I got an absolute bargain. The agent said I was a tough negotiator. He made me feel really good about the price that I paid. And I'm just like, what can I say? I'm not going to...
Congratulations. That's all we can ever say. Congratulations.
All I can say is congratulations, but what's happening with the little voice in my head is, how much did you overpay?
Yeah, it's a red flag instantly for us as I got a bargain,
Yeah.
or the agent was so lovely to deal with. And again, we hate
Or this
poo-pooing
one.
on all agents because
This one,
there's lots of nice agents, but
the agent made it so easy for me.
Yeah, that's a common one as well.
And I'm like, no shit, Sherlock.
Yeah.
That's the little voice in my head, right?
Because you made their commission check real easy.
Yeah. And so there is an absolutely smarter way. And it really does start with getting educated on the buying process. You can't do it any other way.
Yeah. Yep, open your mind to learning new things.
Yep.
It doesn't take very long to do it, and then apply all these tricks and be aware of all the games that are going to happen from the agents.
Well, it still astounds me, mate. And we'll finish up here now, but it just doesn't make any sense. You think about the investment that people make in their education in any other field of endeavour in their life. They'll go through 3 to 4 years of university. They'll spend $40,000-$50,000 to educate themselves in a career that they only to realise they can't get a job or they don't like the job that they're doing, move on to something else. And here they are making life's largest purchase that they're only going to make every 10 years, and they won't get educated around the buying process. It's like the sort of the Australian psyche is, oh mate, I'll give it a crack. I've got a mate that bought a property, and if I get into trouble, I'll call on him and he can give me.
Steve-O will give me some advice. He bought last month.
Yeah, Steve-O did well. He said
he smashed the agent down 15 grand.
Yeah. And so I think I should be right, mate. I'll just get him to help me.
The other thing that shocks me as well, and it's a sad state of affairs, is that I think on average you look at the Sydney property prices, and I think it takes something silly like 7 to 10 years to save for a deposit to buy a property. So people will spend that long saving and working their ass off to get in a position to be finally able to get finance approval to buy a home, and then rush to the finish line and overspend by 50 or 100 grand, which they're going to pay for the next 30 years. It's like, well, I don't get it. Like you could just do a tiny bit of education to give yourself, the insulation between you and the selling agent, and to be aware of all these games to make sure you buy better. It just does not make any sense. So starts with you. If you guys, can get in and do that Get Buy Ready course, you'll be much better for it. And then reach out with any questions to us, and we can unpack them here.
Yeah, and obviously, as a course student, you get a complimentary strategy session, and we've had a number of students taking that up in the last couple of weeks. So, congratulations to you guys that have been getting in there and speaking to me about your property goals and objectives, and allowing us to, develop a strategy to achieve that for you. And so, there's in the 21st century, there's absolutely no reason why people need to think that it's the Australian rite of passage to go it alone.
Yep, we'll leave it there.
Does not make sense.
See you guys. We'll see you next week.
See you guys. All the best.